Hello traders, Cousin Vinny coming to you from theclosingprint.com on December the 13th, 2015. In this video we'll cover the obvious bearish bias on the markets. We have breadth at extremes, NYMO and NAMO, both at levels where we have seen the market turn in the past. VIX is in an extreme as well as VXX. The bond stock ratio gave us a cross. Commodities, for the most part, are flat with the exception of crude oil, which continues to show the descending pattern that we've been pointing out. There is a caveat there with regard to the ban on exports, oil exports, which Congress is taking a look at. Hat tip to my buddy Russell for pointing that out. TLT managed to move higher actually this week, so this comment is wrong. I didn't update that. Junk and HYG both had a pretty nasty week. We'll look at some setups on IBD50 and also we'll look at the sectors. So here is the IWM, the Russell 2000, which fared worse than the other two indices, the NASDAQ and the S&P 500. Down by almost 5%. We're near the lower Bollinger Band. Prices are below the moving averages. We have this volume by price band to deal with. If we drop below that level, it could get ugly very quickly. MACD remains down below zero, and STO is drifting lower as well on this weekly chart. You have to remember there are a lot of these small cap names that are being affected by the oil issues in shale, the debt, and so on. So keep in mind that we could be near a low on the IWM from a bullish standpoint. From a bearish standpoint, obviously you want this to drop lower down below these levels and test these lows that we saw back in the summer of this year. And of course the comp doesn't look that much better. We were down 4.06% last week. Some decent volume. MACD is positive, however. We're watching histogram, looking for a larger bar this week with NAMO at extremes and NYMO on the NYSE at minus 80. There's a very high probability that markets could bounce. It's not a guarantee, it's just something that we're watching for going into the week. That said, prices are below the moving averages. Prices are near the center line and could go either way. Note the volume by price congestion here, and recent support at 48.14 down below. So we closed at 49.33.46. So keep that in mind that we could see further downside before we see any significant bounce. Now with NAMO at extremes, we're watching how that works out this week. Whether breadth continues to deteriorate or if it starts to heal itself and prices start to move higher. Here is the S&P 1500 composite. This has the big cap 500, the small cap 600, and the mid cap 400. Obviously we've taken out this low already, and that's mostly due to the small cap exposure in this index. Note where STO is. We're in the oversold range, and MACD is barely below zero line, but still negative nonetheless. So we'll watch this week. If this continues to deteriorate, that could spell problems for the markets in general. Here is the New York Stock Exchange composite of 2,000 stocks. We had a gap down here around the 10,000 level that we mentioned several weeks ago. We've come right back down to that level at 618, and we closed actually right on this 618 level. You can see the little blip there on this high-low bar. So with this MDD of minus 12 to 1, that didn't help the markets at all, and we continue to see NYSE moving lower as well as MACD. So this week we'll be watching for an early indication what we might see. It's a very high probability that we could bounce, as we mentioned earlier, with regard to NYMO, and the possibility that prices could change direction in the near future. If for some reason that does not occur and we revisit these August lows and late September lows, that could spell problems for the bulls going into 2016. So looking at some of the catalysts that might help the markets this week, if bullish, we should look at the sectors which most of them are oversold. We're looking at Stochk RSI. These look like they could turn back up. They're more bullish than they are bearish, obviously, with the markets already down as far as they are. We're looking for the possibility that we could see some bargain hunting and prices start to move back in the bullish direction. So from the bearish point of view, if you think that markets are going to continue to stay down here, you're going to want to see Stochk RSI continue to embed down here at these lower levels. If we enable stochastic, we can also see the same thing on the 14.3 duration, that stochastic is oversold in most cases, with a few exceptions, of course, namely in staples and also in XLV. But for the most part, these are all oversold and could lead to a catalyst for a move to the upside on the S&P. Doesn't mean it has to happen on Monday. It could take a couple of days, with stochastic and NYMO breadth also at extremes, as well as VIX and volatility. So looking at a chart of VIX, we can see that we've hit an extreme. These levels start to approach an area where you want to fade the markets and could possibly see a bounce. Obviously, this can continue to spike higher due to some unforeseen catalyst, but for the most part, this looks like a good fade going into the week, supportive of NYMO and the sectors that we previously talked about, as well as the indices at lows that we haven't seen in some time. And here is VXN for the NASDAQ 100, also at extremes like we've seen previously, where market inflection came in and the markets pushed higher. Now obviously this can continue to move higher. We see this level at 29.88, basically 30, back in late September, but we're far off of these lows and we're near this area of inflection or support down below at around 44.75, 44.80. Here is the S&P 500 Elder Impulse on the weekly. No prices are obviously below the 50 period moving average. This is the 65 period moving average and the UST to SPX, or what we call the bond stock ratio. We had a bearish cross of the 65 MA this week. What we look for is playing the extremes, not so much the crosses. So we're looking at this level and this indication as being bearish unless we see a turn back down in the short term. Note the 65 MA is flat, so we're trying to figure out which direction we're going to go, and that is reflected in the markets basically moving sideways for the last several weeks. Looking at commodities, this is a chart of WTIC in a very large descending pattern down below the volume by price bands. This reverse Kirby, prices really ripped lower very quickly. Now, with the news that our friend Russell mentioned, the Congress is looking at the possibility of an expiration of the export ban on crude oil. So if that were to occur, that could have a positive effect on crude oil. In addition, you need to remember that Congress is giving the Democrats something for their efforts as well in the name of renewable energy. So you need to keep an eye on stocks like First Solar, which happened to move higher last week, Trina Solar, among other names. So look at the alternate energy name. CSIQ is the Canadian solar name. That one looked pretty good. That's actually a very bullish looking chart, so you might want to check that out. Where CSIQ had this downtrend, the 10 EMA crossed above the 30 and it started a process of building a base and then breaking higher. Now this is obviously not ripping, but it is a trend that could be affected by the news that Congress is working on this export ban and how it'll be affected by the caveats or the things that they need to give the Democrats to get this thing approved. Bonds had a decent week with an increase of 1.58%. We can see where TLT is closing right near the 124 level. The top of this volume by price breaking above this little wedge pattern, and stochastic is in the red zone. MACD is moving positive, so this could embed and we could see higher prices on TLT in the short term, despite the fact that yields are forecasted to increase in the very near future with a rate hike anticipated by the markets. And regarding the Fed increasing interest rates, and the last 15 times they have tightened since the 60s, there was a very good article in 2013 on Business Insider you might want to check out rather than me covering that in this video. It goes through a number of slides talking about how things have changed since the December 1965 tightening and what the markets did shortly thereafter. So this is a really good and interesting article to read. Obviously, if you're thinking that the markets are going to drop, obviously SHYG, the high yield corporate bond funds, got whacked. We're at a lower trend line now. Stochastic's in the green zone and MACD is severely negative. Obviously risk is off. HYG on the weekly chart, if we zoom out, we note where prices have found support in the past and what we might look forward to in the weeks ahead. Here is the new IBD50 list for the weekend, December 13th. We'll be looking at some of these names. Note we talked about AYI in the middle of the week when we're taking that live trade and posted for the premium video subscribers. AYI fared fairly well on Friday, as well as Smith & Wesson, Public Storage, Hawk, and Qihu. All of these names did quite well this week. Let's take a look at Qihu. Flagging out here above the 10-period EMA. MACD's positive, STO is moving higher. Acuity Brands, AYI, we were looking for a breakout, tried to test that level, got near the upper Bollinger Band, and we saw the bulls lose a little bit of strength there. MACD's positive and STO is drifting higher. This one only trades about 500,000 shares average, so just keep that in mind if you're thinking about trading Acuity Brands. Smith & Wesson saw a tremendous amount of volume over the last couple of weeks. Note the prices bolted higher. Obviously you don't chase this. We could see this pull back to the 10 EMA. A flag would be nice as well. This is basically building a high tight flag pattern where prices are running up. It'd have to run up to $34, $35 a share for that to occur. Public Storage also continues to move higher. Note where it's come from, down at the 179 level. The lows up to 245. Prices are above the 10 EMA. MACD's positive on this fairly expensive public storage company. HAWK, Blackhawk Network Holdings. We basically have a W pattern, a breakout, a pullback to breakout, and now we're looking fairly bullish at this point. Nice little pullback to the 30-period moving average. The 10 EMA is above the 30, so it should be a positive trade. MACD is staying above the zero line. We need to see that get back above its signal line, and STO is meandering here around the 30 level and could turn back up. Look for increase in volume. We'll look at the rest of these in candle glance format so you can get an idea how these look relative to the 20 period, which is the blue line, and the 50 period moving averages. Okay, so generally you want to see a pullback to a rising 20 MA. Looking through these, you can pause this and take some notes if you wish. I'm going to get outside with the kids and spend some time with the family. We're in the city most of the day yesterday. at Juilliard and also at Lincoln Center. You can see Facebook, GPN, we were looking for a break higher there. That came back in. GGAL, Hawaiian Airlines, LinkedIn, Linux, both holding near the 50-period moving averages. Manhattan Associates dropping below its 50. Manpower, we were looking for a move higher. That actually weakened in the semi sector. NOAA, Public Storage, we talked about that, looking bullish. Qihu, Smith & Wesson, XPI, we had a little bit of a down day on Friday. Keep an eye on that sector. Starbucks down below its 50. XRS had quite a run. Looks like it's pulling back right now. So I would look at these stocks individually and see how they look with a 10E Stow MACD setup. If you've read my book, you know what I'm talking about. And plan accordingly. I'd be looking for relative strength names for trades and not chasing going into this week. Okay? So this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, check out the blog. Note the address closingprint.com/CV_blog. This is case sensitive. It's a Linux server. We typically post our thoughts for the day going into the opening bell, trades that we're looking at, posture on the S&P 500, and so on. So you can check those out. Also check out my book. This is a valuable resource for you new traders. If you don't understand the markets, this is basically 28 years of experience in a 298-page document or book that will help you greatly improve your odds of success in trading. Okay, so that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com and from the blog. If you're a new trader, just subscribe to the blog here. It's a spam-free site. Click submit and you'll get these delivered to your inbox each day. Take care. I hope this helps, and we'll see you on the stream on Monday.